on their returns.
Right. And tax return preparers, understandably, are sensitive about preparer penalties and circulatory.
They aren't subject to any of that because there's no authority that says they have to split.
I know, but they may, again, they may be a little hypersensitive about it.
There are some. I mean, I talk to tax return preparers regularly, and most of the people I talk to think that the IRS position is wrong, and therefore they will report 100% of the self-employment and the tax to the earner. Others who are not so certain that the IRS might want to take them to court or not splitting at 50-50. They're reporting, but they're disclosing on the tax return for the very reason that you suggest, that some people are hypersensitive about being liable to penalties.
Right. Now, also, the IRS issued an update for its publication, 555 on community property, and so would you like to make any comments about that?
There are, well, 555 is the document that's supposed to tell you how to split income. It applies to opposite sex spouses as well, because if opposite sex spouses report as married filing separately, they're subject to the same income splitting and deduction splitting rules of Poe versus Seaborn. So Pub 555 was out there for them. It's been amended for us, and it points out right in Pub 555 on the self-employment tax, if you're an opposite sex couple, you report it all to the earning spouse. If you're a same-sex couple, that rule doesn't apply to you. It does, however, make clear who is subject to the income splitting rules, and it's registered domestic partners in California, Washington, and Nevada. Those are the 3 community property states that recognize same-sex relationships, and same-sex spouses in California.
Okay. So before we move on, are there any other developments that you wanted to talk about?
Well, there's one thing, it's not about community property as such, but there's one thing that got a lot of attention this tax season, and that's the adoption credit. This is another one of those kind of strange places where DOMA has a strange impact. For an opposite-sex married couple, you are not allowed an adoption credit for the cost or expense of adopting your spouse's child. That's what the code says. You cannot claim the adoption credit for the cost of adopting your spouse's child. So if you're a same-sex couple and you adopt your spouse's child, that rule doesn't apply to you. Otherwise, you're adopting an eligible child and you're entitled to the adoption credit. Well, in 2010, for the first time, the adoption credit was refundable, and it's over $13,000 that you can get a refund on if you spent that much on adoption expenses. And since it was refundable, I think, the IRS this year did an examination or kind of field audit of almost everyone who claimed the adoption credit. And it turns out same-sex couples claim the adoption credit to a high degree. And so there were a lot of mainly lesbian second-parent adoptions that were being questioned by the IRS for months. And in many cases, we're told that they were not entitled to claim the adoption credit because they were adopting their stepchild or because they were adopting the child of their domestic partner. So in these, I've talked to people at the IRS totally agrees that because of DOMA, you actually can claim the adoption credit if you are adopting your same-sex spouse or registered domestic partner's child. The bad restriction only applies to opposite-sex married couples adopting their spouse's child. So in the Q&A about registered domestic partners and their community income, there is buried in there a question and answer that makes it clear that you can claim the adoption expenses that you spend adopting your spouse or partner's child. And so if you end up in an audit and there's an agent out there in the field who doesn't understand about DOMA, and believe me, there are plenty out there, you can point them to this informal statement by the IRS that answers and says, you get the credit.
Yeah, and the IRS agents aren't the only ones who are confused, so a lot of us tax practitioners are confused too, as we said. Now, something that we talked a little bit about before we started this interview is the status of people in civil unions and RDPs and their opposite sex couples.
Yes.
And evidently there's been some informal advice to the effect that a civil union for when we have an opposite sex couple, that those people should be treating themselves as married for filing their income tax
returns.
returns.
Very informal opinion.
Yeah.
It's a letter written by somebody in Chief Counsel's office responding to an inquiry from someone at H&R Block in the state of Illinois. Illinois just passed civil unions, and civil unions, as you may know, are like registered domestic partnerships in California, where the partners are treated the same as husband and wife for almost all purposes. Usually there may be some slight difference in how you dissolve the relationship, but otherwise you have all the rights and responsibilities that opposite-sex spouses do. So I call them spousal equivalents, but they are not spouses. And yet, in response to this query from H&R Block about the fact that Illinois allows opposite-sex civil unions regardless of age, California we only have opposite-sex registered domestic partners if someone in the couple is over the age of 62.
Okay.
But both, in fact, not just Illinois, Hawaii and Nevada allow civil unions for opposite-sex couples. So it's for those people who don't want to be married or have something against marriage or philosophically opposed to marriage. They can enter in, they have the option to marry, unlike same-sex couples, but they can enter into a civil union. Well, the Chief Counsel letter that came back said, well, since the state of Illinois treats you as married, we will treat you as married too, and therefore you must file a joint return.
Or married filing separately.
Or filing, yeah, your filing status is married.
Yeah, right.
Now, I was shocked when I heard about that, so I had the people in Illinois send me a copy of the letter because I couldn't believe it when I'd heard about it. And it's true, that's what the letter says. I was so shocked about it that I wrote to emailed actually to one of the people I talk to regularly in Chief Counsel's office, and I said, do you know about this? Do you agree with this? I mean, you've thought about all these issues a lot. Do you really think opposite-sex civil unions are the same as spouses? And he wrote back and said, well, we treat common law spouses as spouses. Why wouldn't we treat these people as spouses? What's the difference if they're recognized under state law? And I said, yes, but they're recognized as civil unions under state law. The difference is if you're common law married, you are really married. Civil unions are not married. You don't go get a divorce. Your relationship might not be recognized in a state that only recognizes marriages. There are differences. And we have case law. We have a case in the Ninth Circuit where a registered domestic partner, same-sex registered domestic partner couple, tried to challenge DOMA, saying that it wasn't fair that it didn't recognize their relationship. And the Ninth Circuit said, you don't even have standing to challenge this because you're only registered domestic partners. You are not married. As a result, I think the IRS informal reply was a bit hasty. I think they have the power to take that position. I think they can say, for tax purposes, we're going to treat you as spouses. We're going to construe the statutes that way, but it shouldn't be in a private letter that bears no authority. They should do it through a ruling or regulation with opportunity for public comment.
Right, and so here we are, right in the front of tax season, and of course, I mean, I think that's why H&R Block asked for the advice. But I think that the IRS needs to go beyond, like you said, this informal response. They need to get something out that's a little more. I
think they have bigger fish to fry, and they're just going to let us try to figure it all out on our own.
Oh, how fun! Okay. Well, here we just got through sort of our introduction, and we've got about maybe 4 minutes left. So let's see here. Why don't we just talk a little bit about this business of income splitting and so forth?
Sure. And the general rule, I mean, a lot of people say, wait a minute, do I split all income? What don't I split? How do I know it's community? When is it not community? There's a strong presumption that anything you receive during the marriage or the registration is community. So I would start with the assumption that it is community. Questions have arisen. Can I own the house? My partner doesn't. We're paying the interest deduction out of community funds. Do we split that? Because how can she claim interest on a mortgage on a home she doesn't own? Well, these questions arose back in the period before joint returns for opposite-sex couples in community property states. And the general rule was, if you're going to split the income, you ought to split the deductions. And forget about who has the right to it. The best case I can tell you about is the married couple who got divorced, and the husband was required to pay alimony to his ex-spouse. Then he remarries, and so the alimony to the ex-spouse is being paid out of the community income with the new spouse. So the IRS says, okay, husband gets to deduct half the alimony because he pays half of it, and the new wife gets to deduct half the alimony because she's paying alimony to his ex-wife. Now, if you can split alimony in that way, I think you can split just about anything as a deduction.
Okay. Again, we're about running out of time. I think maybe what we should mention is that there is a worksheet that's in that community property publication.
There is. I'm not totally pleased with it, but if you have nothing else, look, it's a worksheet that gives you some guidance on how to split, how to report the splitting of community income and deductions, and you must attach that worksheet to any return. The interesting question this season is going to be whether the software companies like TurboTax have sufficiently adjusted their product to handle this. They say they have, so they must have a worksheet of their own in TurboTax. And the other question is going to be whether you can e-file, because it depends on whether or not that return, that attachment is a mandatory attachment when you e-file.
Right. So it's going to be tricky still.
Yes.
You know, doing these tax returns is going to be difficult. We still need to refine these issues. Like you said, you may not be able to e-file.
Right. Nobody,
practically speaking.
Almost no one e-filed last year.
And like in California, what's happening is we have to file maybe a joint return or at least married separate returns. And then meanwhile, then we have to be able to generate these separate federal returns. And
right, you have to file 2 separate individual returns at the federal level. Then you have to do a fake mock-up and then use that for your California joint return.
Okay, folks. As I said, we do have a previous interview you might want to take a look at for some details of our discussion on this area of income tax for same-sex couples. We hope that we've provided some insights for you here about some of the developments. And we'll see you next time on Financial Insider Weekly.